Medtronic, ticker MDT, is currently trading at $91.35, and over the past month, the company is up by almost 15%. Now, over the past 6 months, the company is up by about 5%. If we have a look at the maximum graph, we can see that the company has been on a steady rise since 2010, reaching its maximum value of $133.81 to then fall down to about $80 a share. Now, one of the main reasons why I believe MDT is a great buy at its current trading price is its very diverse portfolio and the fact that the company operates in more than 150 countries worldwide. Now, MDT focuses on producing medical devices in 4 divisions: cardiovascular, medical, surgical, neuroscience, and diabetes. And as the population is constantly on the rise and less economically developed countries are becoming more economically developed, there is always the ever-growing need for medical equipment. And that is also why TripRanks currently has a 15.93% upside on MDT, predicting a price of $105.88 per share by the end of 2023, with 7 buy ratings, 10 hold ratings, and 1 sell rating. Now, to find out whether MDT is a buy at its current trading price, we'll jump over to my fully automated stock evaluation spreadsheets, where we'll have a look at the 9-pillar analysis and find the intrinsic value using the Grams formula revised, discounted cash flow model, multiples valuation model, and the dividend discount model. And all these models will lead to our ultimate valuation at the end of the video. Now, if we jump back to the stock screener, we can see that the current dividend yield of MDT is sitting at about 3%, which is not a super high dividend yield, but it's very good for a medical company. The dividend payout is $2.72 per share per year, and the payout ratio is sitting at about 70%. Now, the analysts currently have a target price of $98.87 by the end of 2023, which is about $7 higher than the current trading price. The institutional ownership is sitting at about 85%, and the beta of the company is sitting about 0.7, which means that you won't see as much volatility with MDT as you would with the overall market. And up here we can see that over the past year the overall income of MDT has indeed increased. Now we can move to the 9-pill analysis, where we will plug in the ticker MDT and all the metrics will show automatically. Now right away we can see that the rating for MDT is 7 out of 9, with the 5-year PE ratio and the price to free cash flow of the past 5 years both sitting above the values we would like to see. Now this is quite common with companies that operate in the medical sector, and therefore this is not that big of a red flag. Now, apart from the 5-year PE ratio and the price to free cash flow of the past 5 years, all the other metrics are sitting at values we like to see. So the 5-year profit margin is sitting above 10%, sitting at about 70% over the past few years. The net income, revenue, and free cash flow have all been increasing over the past 5 years, and the long-term liabilities over the 5-year free cash flow is sitting at 0.98, which means that MDT could pay off its debt using their historical 5-year free cash flow. There is also consecutive dividend growth sitting at about 10.5% annually, and there are decreasing shares outstanding over the past few years, which is great. Now, for those of you who don't know, we generally want there to be a decrease in shares outstanding, as that means that you will own a higher percentage of the firm you buy over time. Now that we have completed the 9-pillar analysis, we can move to calculating the intrinsic value of MDT. First, we'll use the Grams formula revised. I've already plugged in the ticker MDT, and as we can see, the earnings per share for MDT is quite low. But as I said before, that is quite common for the medical sector. Now the EPS and the earnings growth estimate of MDT would give us an intrinsic value of $40, which is currently quite lower than the current trading price. But now let's move to the next valuation model, the discounted cash flow model. We will plug in the ticker MDT, and as you can see, the free cash flow over the past 10 years shows up automatically, calculating the average growth rate to be at 6.73% annually. Now I project a forward growth of 5% over the next 10 years, which would give us the future free cash flow over the next 10 years. Now to move forward in the valuation, we need to calculate the present value of that future free cash flow, and we do that using the discount rate, and currently the discount rate of MDT is saying about 8%. So we will plug that in, and as you can see, when we sum up all the future free cash flow, add cash and cash equivalents, and subtract total debt, we get an equity value of $116,000. We divide that by the shares outstanding and get an intrinsic value of $87.41. But now let's jump to the next valuation model, the multiples valuation model, where I'll be comparing MDT to BDX and SYK. Both of these companies are in the medical field and are very similar to MDT structure-wise. I will take these companies' current stock prices and divide by their current earnings per share to get their price to earnings ratio. I then average out that PE ratio and multiply by the earnings per share of MDT to get an intrinsic value of $150, which is quite higher than the current trading price, showing that MDT is possibly quite undervalued compared to firms that operate in the same sector. But now we can move to our final valuation model, the dividend discount model. And as you can see, I've already plugged in the ticker MDT up here, and the dividend payout over the past 5 years shows up automatically, calculating an average growth rate of 8.04%. Now I project a forward growth rate of 4.5% over the next few years, and of course MDT pays out its dividends quarterly, so we're going to plug in a yearly dividend frequency number of 4. And this will give us an intrinsic value of $116.94, currently about $26 higher than the current trading price. Now we can move to finding the ultimate value of MDT by averaging out the Graham's formula, multiples valuation, discount and cash flow valuation, and the dividend discount model to get an intrinsic value of $98.50, currently about 8.3% higher than the current trading price. Now if we plug in a margin of safety of 10%, we can see that the acceptable buy price for MDT would be at $88.65, currently a little bit lower than the current trading price. Now if we have a look at the graph for MDT, we can see that over the past year the stock has actually been trading at about $77. Now I personally did add this stock to my portfolio at about $80 a share in January. Now if you find the valuation spreadsheets helpful and you want to check them out, you can head over to my Patreon at the link in the description. With that, if you enjoyed the video, make sure to give it a like and consider subscribing if you want to see more content like this.